Okay. Next item up for business is consider update on action of Mayor's Coalition regarding sales tax distribution. I also see this is going to be on our Finance Committee meeting on Thursday. But good, Mr. Martin.
Actually, Ms. Cannon's going to give you a brief summary of that action from the Mayor's Coalition.
Yes, sir. Mr. Chairman and Commissioners, this morning, this item was placed on the agenda this morning just as information because the Mayor's Coalition did take action on March 20th after your last board meeting on March 18th. As Commissioner Keefe has stated, we are planning to have this item on our Finance Committee agenda for more detailed discussion. Before I get into the action taken by the Mayor's Coalition, I'd like to provide just a little bit of background information. All of you are aware that sales tax is distributed based on two different methods, the per capita method or the ad valorem method. The county is the unit that has statutory authority to actually select the method of distribution.
Ms. Cannon, while you're doing this, for anybody who might be watching, could you explain per capita versus ad valorem?
Yes, sir. Thank you, sir. Per capita basis means that the sales tax would be distributed based on the population of the county and all the municipalities. The ad valorem method means that the sales tax would be distributed based on the total assessed valuation for the county and the municipalities. Those are the two methods. And again, the county has the statutory authority to select a method annually, and the county must make that selection by the end of April of each year. In October of 2003, the county entered into an interlocal agreement with the municipalities basically for a modified per capita distribution. Basically, the municipalities agreed to reimburse the county either 50% of an annexation or 100% for Fort Bragg and Pope Air Force Base. And that's the method that we've used since 2003. However, that agreement will expire this June of 2013. The Mayor's Coalition at their March 20th meeting, in a nutshell, have offered to continue the agreement for the full reimbursement for 1 year. Thereafter, they have proposed to completely phase out any reimbursements for prior annexations through a long-term agreement. There is an initial 4-year term with 4 optional renewals for a 20-year agreement. One key note is that Eastover will no longer reimburse for their total incorporation. They have agreed to participate if there are any future annexations during the term of the long-term agreement. Financially, this will impact the county because we will lose, based on the municipality's reimbursement, $318,000 per year for the agreement, and in addition, $164,000 that represents Eastover's payment. That totals about a reduction of about $485,000 per year until our full $6.7 million reimbursement is phased out. We've attached and added to the packet a spreadsheet that shows the decremental reductions over this 20-year period. Again, we wanted to provide this detailed information for your consideration as we move toward the April 4th Finance Committee meeting. A copy of the draft minutes of the Mayor's Coalition meeting is also attached for your review.
Okay. Are there any questions?
Mr. Chairman, I've been trying to keep up with this thing and understand what we got here. Essentially, the proposal that the mayor's put forward is their plan would eventually phase out this process in total.
Yes, sir, that's correct.
What justification has been used to suggest that?
I think, I'll let Mr. Martin correct me, but from what I heard at the Mayor's Coalition meeting the two that I attended, some of the municipalities, specifically the city of Fayetteville, felt like this was not an agreement that should go on forever, and that they felt like it should be phased out, and that the county should have the opportunity to make up that revenue source. But I was a part of the agreement back in 2003 along with Mr. Martin. It was never intended just to end in 2013. Our then attorney Granger Barrett suggested that you couldn't have a perpetual open-ended agreement, so that's why the agreement was 3-year agreements with additional renewals.
So what we're proposing here is done throughout the state in regard to annexation of properties that were formerly a part of the county. Is that fair to say?
This unique agreement.
No, I'm trying to get a sense of our plan that we have here and this proposal going forward. This procedure occurs throughout the state with regards to annexation. In other words, properties that were formerly a part of the county that come into a city. Is that done throughout the state where we're doing it pretty much?
I think I understand your question. Upon any annexation occurring in any municipality anywhere in the state, once that annexation occurs, the municipality that's doing the annexation gains sales tax as a result of either of the two methods, and all other municipalities and county government in any county, any municipalities within that county lose their share based on whatever the distribution formula is. If it's per capita, it's based on per capita loss. If it's ad valorem tax levy, it's on that basis. But everybody else other than the annexing municipality automatically loses a share of its sales tax upon the annexation by any municipality.
So as the cities grow, this kind of thing happens all over the place, essentially.
Yes, in essence it would.
If I could bring some clarification, 8 out of the top 10 urbanized counties in North Carolina are at ad valorem as we speak now. One of the ones that's still at per capita is Durham County, but it's sort of unique that the city of Durham is really the only
Right, it's the only city
municipality.
they got.
Wake County does a per capita, clean, pure per capita, no payback or no anything, and no reimbursement.
Oh, really?
Yeah, that's the only one in the top 10 that does per capita.
Mr. Chairman,
Yes, Ms. Ranch.
I think, first of all, that this is an authority that we have. I don't mean that in a bad way, but it's given to us by the state of North Carolina to either have ad valorem or per capita method of sales tax distribution. 45 counties have ad valorem, I believe, and 55 counties have per capita. And reading the minutes of the meeting, it's hard for any board, including the municipality boards also, to commit to anything that one board may do. In other words, they have proposed a 20-year agreement. I would doubt very seriously that any of us, and many of them, will not be here 20 years from now. The board is going to lose money that this commissioner feels like that they can't sustain over that period of time. I also feel like that it needs to be pointed out that we've had 2 reevaluations since I've been on the board, and that's getting my 13th year. Each time that we have had that, we have proposed a revenue neutral budget, which means that we have reduced our tax rate. We did that. You mentioned it this morning in your State of the County remarks. And even before it was 86 cents, it was 92.5 cents at one time, and it's been reduced. to now 74 cents, which is competitive with the surrounding counties. Now, where I'm going with this is in no way trying to criticize municipal boards, because this is their authority to set their tax rate. That's whatever it will be. But there is no municipality in Cumberland County in those two reevaluations that reduced their tax rate, with the exception of Fayetteville City one time, and then it was not revenue neutral. It was just a reduction. Now, we can't commit their boards to anything, and they, in turn, can't commit us to anything. A one-year agreement, we'll be right back here at this time next year talking about the same issues, doing the same thing on how it affects everybody. Our attorney has already told us in a previous meeting that we can't hold any municipality to an interlocal agreement. If they don't agree, they don't agree. However, that puts us in a terrible position, because if 2 or 3 of them do not agree on the interlocal agreement, how are we going to treat them? And I wish somebody, either management, another commissioner, or a person from the city, or whomever, would tell me how we're going to treat a situation like that. Are we going to treat municipality X differently than we do all the rest of them? Are we going to treat them differently? And so as I look at it, and I see, and I know this is up for discussion at the Finance Committee meeting, in order to sustain our revenue where it is now, and to continue to offer the services that we are offering in this county to all citizens, regardless of wherever they live, I don't see we've got a choice except to change to ad valorem. It just doesn't, we don't have a choice, so we're being forced into that position. Yes, I would love to continue for a long, long time with the same agreement we've got. I think it's fair to everybody. The ad valorem method isn't going to help us as far as Fort Bragg and Pope Air Force Base is concerned, because there is there's no property out there that can be taxed. We've even talked about it as a board over the years. When you've got private enterprises out there that are serving Kentucky Fried Chicken and serving burgers out of Burger King and other places, they can't be taxed. Can't collect any sales tax on them either. So I think that, it's just putting us in a difficult position. Now, when this came up before, and I want to remind everybody of this too, since this is a discussion item, and we've been here a long time, I'm going to say my piece. We can't continue, if we were to eliminate this from our budget, we can't continue to maintain our tax rate at the same level that it's been, and continue to offer the same services we've been offering, which the state also directs us to fund these human services, and the jail and the courthouse and the sheriff's department and all those other things that we have to fund. So with that, I'm going to be quiet and not say anything else until the Finance Committee meeting. But I just want to point out some of that history in there, and it's a difficult decision. And the fire departments, we negotiated with them when this issue came up before. I think that's something we're going to take a serious look at. I think it's something that we have got to we've got to look at very seriously. And the rich can't continue to get richer and the poor get poorer. So,
Thank you, Commissioner. Is there any other comments by commissioners?
I just got a question.
Good.
Amy, I'm trying to understand this table over here, amortization of sales tax, hail harmless payments. Now, I'm assuming that first column talks about total reimbursement percent annual charge, is the red decreasing?
Yes, sir. That's the annual percentage change of the payments from Fayetteville to Cumberland County, Fayetteville to Eastover on down, and then the dollars related to that. Basically, our reduction from Fayetteville each year would be 0.4% or $303,290.
30329. I got that. I'm with you.
Yes, sir. And then we carry this on out to tell you, in year one, there'd be no change. You can see that each year we've been receiving $6,065,000 from the city of Fayetteville. In year two, it would be a 95% reimbursement for a reimbursement of $5.7 million.
Okay, now which formula is this? Now this is
This is the modified per capita.
what we have presently.
No.
Yet, what
they're
this is
proposing.
what the mayor's coalition.
Their suggestion.
Yes, sir.
Okay.
And it would be phasing out the modified per capita, phasing out the reimbursements to a pure per capita sales tax reimbursement basis. The municipalities would no longer, at the end of this 20-year period, they would no longer reimburse us for our annexations. Basically, they would keep the dollars that they had been reimbursing us. Bottom
That's
line.
not good.
No, sir. Bottom line, it would be at the end of the 20-year period, a $6.7 million reduction of recurring revenue for Cumberland County.
Okay, that's okay. I got that.
Yes, sir.
It is important that this is 4-year contract. One 4-year contract with 4 more renewals.
Yes, sir. That's correct.
Okay, so at any time it can be renegotiated.
Yes, sir.
Okay.
Okay.
Yes, Commissioner.
Ordinarily, is this something that should be voted on yearly?
I think it's something that we should, the board should consider on an annual basis.
All right. And I don't see, so without an agreement, we would be doing this every year.
Yes, ma'am.
Okay. We have the authority delegated to us by the state, or assigned to us by the state, to do this yearly.
Yes, ma'am.
All right. 45 counties now do it. It's almost 45 and 55, I believe, ad
I
valorem.
believe 45 use the ad valorem method and 55 use per capita.
Okay. How is there, had we been straight per capita or straight ad valorem, is there a chart that shows us the difference, or will we have that
We can provide
Thursday?
that. Yes, ma'am. We can provide that.
just straight without any buyback? I know this is a hot button issue. It is a terrible issue. It is an emotional issue. An emotional issue. I went to one of the meetings, and I heard from the mayors, and I don't think that there's anybody who would not say that they wanted as much revenue as they can get. That's their job. But it's our job to make sure that we provide the services that we are mandated to provide. Right? Okay. Mr. Chairman, this, now that I have babbled on, I want to refer this on to the Finance Committee and urge all commissioners to be present.
Thank you. I believe it was already on that agenda.
It's on the agenda, yeah.
And this was just more for a kind of briefing for initial discussion. If there is, since this is a very important issue, if any commissioners would like any additional information for staff to bring forward, if they could bring it up now or after the meeting. Okay, is there anything else? This was just a discussion item.
I got a question. I'm not quite clear on something.
Okay, Commissioner King.
I'm just trying to understand, Amy. Okay. Obviously, one would do what is in one's best interest. Pretty much so.
Yes, sir.
All right, looking at the Avalon versus the other, and we're talking about changing over. So legally, unless we can both to come to an understanding, we don't have many choices, do we?
No, sir.
No.
In other words, if we and or the cities, municipalities don't come to a mutual love fest, if you will, and saying we shall overcome, then we have to move ahead with what you're proposing.
It comes down to whether this board is in a position to accept losing revenue each year
Right.
over a period of time.
Right. No, we can't do that.
We can't do that.
I mean, that's not good management. In my mind, that's not good management from a county perspective. And they got to realize that. I mean, do we need to send them back a letter that says this deal is dead and do you have anything else? Or do we just go forward and do what we want to do? And
I think that's the type of discussion we were planning to have Thursday morning.
okay, I'll leave it alone.
Well,
I'll leave it alone.
I think there are more options on the table than just.
Oh, really?
Well, it's without an interlocal agreement, we're going to be looking, as Commissioner Ed said, at a deficit in spending,
Right.
a deficit in income from sales tax revenue. If we accept the proposal as it is now with a limited local agreement with the mayors, we have over the first 4 years, there will be a reduction in the payback method. And finally, the third option is to vote on a ad valorem method for us. So we do have 3 options to move forward with. It's not as simple as this or that.
But the 3 options, the one of them, if I understood you correctly, would not be to our advantage.
Well, we
So that to me is not an option.
To our advantage, actually, 2 of them could possibly not be to our advantage.
Right.
And depending how you, and this is just discussion that we can carry on
Sure,
with it.
sure.
But there's going to be a serious disadvantage if we were to go to one option to the other municipalities in the city.
I got you.
Yeah, catastrophic almost. Thank you. Is there any other questions or any other items that we'd like to bring forward?
I'm totally confused.
Okay. That being said, we'll move on to nominations to boards and committees.